I believe you've heard this statement before. The more you trade, the more money you make. No, sorry. I bet you have never heard that statement anywhere. But some way, somehow, you hold that belief in your mind. Have you asked yourself, where did that belief come from? Or how did that belief become so strong in your mind? Have you asked yourself how many times you've blown a good day just because you kept trading? That's not bad luck, that's overtrading. This is a huge forex myth nobody talks about. The more you trade, the more money you make. Sounds logical, but in reality, that's one of the most dangerous mindset to carry as a trader. It is one of the fastest ways to drain your account. Overtrading isn't grinding, it's not discipline, but most times it's just our emotions getting a hold of us. We are not entering the trade because price made sense, but you are entering because either you are bored, impatient, or you are trying to get back what you lost. But professional traders do not trade like that. They don't trade all day. Professional traders actually wait for their setup, they execute, and they stop for the day. But beginners or most retail traders have adapted this mindset. That is one of the key reasons why many traders fail in the trading industry. They enter, exit, re-enter, they flip their buyers, revenge trade, then they say the market is against them. Market makers are looking for their stop loss. But there are reasons for this actually, and we are going to get into that soon. Stick around and let's learn more. More trades do not equal more profit, as most of us believe, but rather better trades are what equals more profit. Just one clean trade or one clean setup can outperform all those emotional trades we tend to take when that mood of overtrading is activated. Now, the real problem is that most traders do not have a strategy problem. We hear this a lot, whether from mentors, social media, or wherever, that strategy is not a problem. There's a percentage of truth in that because most traders do not have a strategy problem. What they actually have is a behavior problem. And many people will call it psychology, but let's call it a behavior problem. We can have a profitable backtest. You realize that when you are backtesting your strategy, it's very, very profitable. You see your setup, you enter, you make profit. Then once you take a loss, you take a loss. At the end of the backtest, you see your total profit, your win rate. Everything seems so nice and clean. But when you hop onto the charts, you still lose money. We can have a clean entry model and a solid risk to reward. Yes, too, we are blowing accounts and losing money. Why? Because none of that matters if we cannot control our behavior, how often and why we trade. Overtrading is not just about taking too many trades. It's taking trades outside your edge. When you have a specified edge, yes, too, you choose to take a trade outside of that edge, you are overtrading. You're overtrading when you trade just because price is moving. You are trading just because you are bored. We call it a behavior problem because overtrading does not start on the chart. It starts in the mind. It starts in the mindset. Let's break down the real causes of overtrading. We have been made to believe that in life, the more you work, the more you earn. That's why even in your 9 to 5, we have something called overtime. The more you work beyond your time, the more you earn bonuses or whatsoever. Or if you have your own business or you have whatever you are running that gives you your own money, the more you put in the work, the more or the higher the chances for you to actually make money from that. So oftentimes we bring that into trading, thinking the more trades we take, the more money we are making, or the more activity, the more money we are making. But that's not the case. Trading is one of the places where the real money is actually made from waiting. In actual sense, if you are waiting in real life, it might look like what you are wasting time. But in trading, that is where the real money lies. If I'm trading a lot, it means I'm learning faster. That's what some of us might also think. But more trades don't mean more learning or don't mean more money. They mean more noise. Because the more you are forcing trades, the more you are looking for trades. When your edge do not even appear on the chart, you are clustering what you are supposed to learn. You are supposed to learn from your edge. But here lies the case. You are taking trades outside of your edge. So what lessons are you picking? What are you learning? Professional traders don't trade all day. They wait and they execute. Really, most times we are also impatient. We want the results now. We want to see our money now. We want, even when we enter a trade, we are always watching the chart because we want the trade to move to our take profit as quick as possible. You sit at the chart, you've waited just 20 minutes and nothing is happening. Your mind just says, I should be doing something. But as we've said earlier, trading is one of the few professions where waiting is the work. Impatience convinces you that a mediocre setup, most times these setups do not even exist on the chart. We form them in our mind and we see them on the chart. And impatience convinces us that that setup is good enough. So we just jump into it. One of the legendary traders, Jesse Livermore, said that the big money in trading is not in the buying and selling, but it's in the waiting. If we are able to wait, that is where the big money lies. That is where the hardest and toughest decisions of trading are made. Another reasons why we tend to overtrade is the fear of missing out. Traders' fear of missing out on trades is actually greater than their fear of unprofitability. Because if a trader fears unprofitability enough, they can be able to do the right things. But most times what we fear is missing out on trades, missing out on setups. You see a candle move fast and your mind tells you, if I don't enter now, I'll miss the move. The move is gone. Forgetting that there are a lot of moves to come, either today, the next day, the next week, the next month, the next year. Ask yourself this question. Exactly 1 year ago today, do you remember the trade you took? No. Exactly. That's how it is. You will not even remember the trade you are taking today in the next year or in the next 2 years. You will not remember. So that's attachment to taking trades, forcing setups, having that fear of missing out because we feel the setups are limited in the chart. If you sit down and think about it, you realize that it makes no sense. Because even the trades we are taking today, we will not remember them in the next year. So why don't we just wait it out and take quality trades? Because our mind tells us, if I don't jump in now, I'll miss the move. So we just jump in with no confirmation, no structure, no plan. Sometimes we even have the plan, but instead of us to wait for the price to get to our planned entry levels, we just jump in because we fear that price will leave us. So we abandon our plan and we move with price. Fear of missing out does not care about your rules, but your ego. What you're actually feeling at the moment. At that moment, thinking that price will leave you. Yes, price can leave you. And if it happens like that, just let it go. Because there are many more opportunities to come. Another reason why overtrading is very common in traders is our mentality or our addiction to recovering losses quickly. Most times, beginner traders are so addicted to recovering losses quickly that whenever they take a loss, they are looking for ways and means to recover that loss. And that is what even brings more losses. You take a loss, a normal loss, and instead of accepting it, your mind says, no, I just need just a good trade to get what I lost and even be in profit. And that is where it all starts. We just scanning through the chart. And trust me, whenever you are forcing what is not there to be there, you train your mind to see it. So those setups that you take, you realize that after they've hit a loss, 3 days, 4 days later, when you go back and look at that setup you took, you realize that it doesn't make sense because it doesn't even fall in your trading plan. That's not strategy. That's emotional trading in disguise. We are trading our emotions, not currency pairs. And by the time you realize that trade you want to use to recover your loss also loses. And one loss turns into two. And we are in the next trade trying to recover the previous 2 losses. And that's how you blow your account. This has been the secret account killer for many. And the moment you start overtrading, don't forget the effect of overtrading will also show on your psychology and your trading account. Overtrading damages 3 critical areas in a trader. It destroys your edge because a strategy or a profitable strategy works only under specific conditions. A strategy is called a strategy because it needs certain conditions and certain times to work. If it works at all times, then it ceases to be a strategy. It becomes general rule for everybody to use. But the reason why it's called a strategy is because it needs certain conditions to work. That is why every trader does not use the same strategy. We all have what works for us. So when you are over trading, it pushes you to enter late, ignore those specific conditions you look for before you enter into a trade. It pushes you to go into the lower time frame without even trying to filter out the noise, and you start trading the noise. Your edge disappears, not because your edge has failed, but because you stop respecting that edge and you started respecting your emotions. Overtrading also wrecks your psychology. One loss, even a single loss, hurts you so bad that you want to recover it quickly. Imagine a chain of losses, a streak of losses. Most time what that does is that it messes with your confidence and you automatically start hesitating on good setups. When you get a good setup that you are supposed to enter, you hesitate, you panic. When you're in a trade and it starts running into profit, you panic and you close your winners early, and you start relying on hope. Anytime your trade is running a loss, you are hoping that it comes out of drawdown and moves into profit. You start questioning everything, and that's when, if you don't even take it, you ditch your strategy for another strategy, and that cycle continues over and over and over and over. You are no longer trading price, but you are trading your emotions. The third thing over trading destroys is that it destroys your statistics. If you're over trading, most times you realize that it lowers your win rate, increases your drawdown, breaks your expectancy. Most times you wouldn't even notice it immediately, but you notice it when you sit back and you watch it and you start thinking, reflecting, and you think to yourself, why does my strategy work when I'm backtesting but not when I'm live trading? Because when you're live trading, you cease to follow that strategy as you did religiously when you were backtesting, but you follow emotions. In backtesting, there are no emotions because it is what has already happened. Now, over trading is not just something you would fix just by saying, I need to stop over trading, but you need systems to rely on. There's a popular quote that you don't rise to the level of your goals, but you fall to the level of your systems. You need systems. You need discipline. But discipline does not come by OS. Discipline without structure will never last. It will not last. It will only come when you feel the need to be disciplined. But when emotions hit and you have systems are what guide you. That's why overtrading is not solved by motivation, but it's solved by rules that remove the choice of overtrading. If you rely on feelings, you will fail eventually. We need to set up systems. So what systems can we actually set up to be able to come out from the trap of overtrading? The first thing we can do is limit trades per session. We have to decide in advance that as I'm going into the market today, how many trades do I want to take today? Am I taking a single trade or am I taking 2 trades maximum? No exceptions. Personally, I take a single trade per day or on a single trade per day on an account. So let's say I have 3 accounts. If I'm seeing 3 setups in a day, I'm taking only one on each account. So if I take a trade on the first account and I see the second setup, I'm not taking it on that account. If I only have one account and I see 3 setups a day, I'm taking the first and the 2 are gone because I'm taking a single trade per day. So you can tweak that to what actually favors your system. So once that limit is hit, you know you are done. Even when you see a trade that looks good or says, oh, just one more trade, you know that you have a rule that says just one trade per day or per session. You decide that. We can also implement time-based trading windows. We can decide to trade during specific sessions. If your model works best in the London or New York session, then why stress yourself finding setups in the Asian session? If your model works best in the Asian session, why stress yourself finding setups in the London session or New York session? It's all based on you to sit down and decide all of these. Time filtering removes boredom trades. If it's currently 6 a.m. and I know 6 a.m. is not the start of the London session yet, and I only trade a London session, there is no need for me to go on the charts and try to force a trade. I'll just have to sit out and wait for my session before I start to trade. Also, we can define or set rules on what invalidates a setup. Before entering a trade, we must know what will make this idea wrong, what will make this trade invalid. If you cannot answer that before entering a trade, then you should just know that you are guessing. So every trader has something that makes their trade invalid. That's why we have the concept of stop loss. So you put your stop loss at a level that you know that when price gets to this level, my trade is no longer valid, so I accept my loss. That is the meaning of a stop loss. So if you can't answer that, it means you are guessing, because where you are placing your stop loss is just guesswork, no real systems, no real strategy. We can also implement a rule of stopping trading after a loss, because one loss does not mean the market is against you. Most times when traders enter into a loss, that is when the over trading genes are activated. So you can set up a rule that if you come to the market in a day and you take a trade, it hits SL, you just sit that day out, you are done for the day. Because the moment you enter another trade, and let's say that trade also hits stop loss, you start thinking to yourself, how can I recover this? Your emotions start rising. And for a person who is battling over trading, that will be the last position you would want to get yourself in. So you can set that rule for ourselves also. Many profitable traders stop trading after one loss for the day, not because they are weak, but because they are protecting their psychology. They know what entering a streak of losses in the shortest possible time can do to their psychology. So that is another rule to invent to be able to take us from the traps of overtrading. We can also journal every trade. You must journal why you entered, your emotional state when you entered the trade, whether it followed your rules or not. Because remember that as rules have been set, there will be days definitely that you try to move away from your rules. There will definitely be days of indiscipline, but what you are going to fall back on is your journal. If you are able to write, okay, this day, I was indisciplined, but I recorded it. This is what I did, my emotions, my state of being when I took this indisciplined decision. That is when you are going to realize that anytime you come into the market and you start seeing those signs, you just remind yourself that this is how I took this indisciplined decision the last time. So you caution yourself. Overtrading hates documentation. When you are documenting what you are doing, that is when you see that you are moving away from your rules. So journaling is very, very important. This is how we can battle overtrading in our trading. And until we are able to eliminate this indisciplined lifestyle from our trading, the journey to profitability would be very, very difficult. And our psychology would always be messed up. Implement these simple steps and find out the results for yourself as a newbie trader who is in the trap of overtrading. Don't forget to hit that subscribe button, like button, and share your comments in the comment section. Let me know some of your battles you've had with overtrading and what you would like to hear from us next. You can also check out other videos on our channel. See you in the next one.